Good evening, everyone, and welcome to Advanced Enzyme second quarter and first half 22 earnings conference call. I hope you all are doing well. Joining us on the call today are Mr. Mukund Kabra, full-time director, and Mr. Beni Prasad Rauka, group CFO. For a reference, we have prepared a detailed presentation to supplement our comments during this conference call. This presentation is posted in the Investor Relations section of our Advanced Enzymes website and on the stock exchange as well. Before we proceed, I would request you all to please read the forward-looking statements disclaimer contained in the PPT. During our call, we will make forward-looking statements regarding our expectation or prediction about the future. Because these statements are based on our current assumptions and factors that involve risk and uncertainty, our actual performance and results may differ materially from our forward-looking statement. Now, Mr. Kabra will start the opening remarks by briefing you all the earnings update and business highlights for the quarter, and then Mr. Rauka will walk you through the financials in detail. Post that, we will open the floor for question and answer round. So, without any further ado, we shall commence this call. Over to you, Mr. Kabra.
Thank you, Ronak. Good evening, everyone. Once again, I welcome you all, along with the whole AETL family, to this conference call for the quarter and half year ended 30th September 2021. First and foremost, we hope that you and your family are in good health and in high spirits. Before we begin, I would take this opportunity to wish each one of you a very happy Diwali and a prosperous New Year in advance. Let's hope we all have a successful and most importantly, a healthy year ahead. I will start this call by sharing with you the earning updates and the business highlights for the second quarter 2022 and segment-wise performance. Our revenue grew by 6% on year-on-year basis to rupees 1,271 million. Our EBITDA declined by 16% to rupees 493 million during the quarter. Our PAT declined by 22% to rupees 303 million. EBITDA margin stood at 39%, while PAT margin stood at 24% during this quarter. If we look half yearly, the highlights are like this. Our revenue grew by 14% on year-on-year basis to rupees 2,641 million during first half. Our EBITDA grew by 2% to rupees 1,120 million. Our PAT declined by 5% and stood at rupees 700 million. EBITDA margin stood at 42%, while PAT margin stood at 27% during this period. This impact in the operating margin is because of high input costs. We are finding unprecedented increase in almost all the input materials, including fuels and logistic costs. Given that the growth journey we are into, we will contribute to invest and grow in some of our critical aspects like R&D and business development. Our new R&D facility work is on track and is in good progress. We believe this investment will help us to set very strong foundation for the future growth. Now I will take you through the segment-wise revenue. The human nutrition contributed 72%, animal nutrition contributed 11%, industrial bioprocessing contributed 9%, and specialized manufacturing, which is the revenue from SciTech, has contributed 8% in the total revenue during this quarter. The human nutrition segment grew by 4% to rupees 920 million in quarter 2 financial year 22 as compared to 885 million in quarter 2 financial year 21. The animal nutrition segment grew by 3% to rupees 136 million in quarter 2 financial year 22 as against rupees 132 million in quarter 2 financial year 21. The bioprocessing segment underperformed by 37% during this quarter. it accounted rupees 118 million in Q2 financial year 22 as compared to rupees 187 million in Q2 financial year 21. In this segment, food business contributed 7% and stood at rupees 86 million, down 33% year-on-year basis, while the non-food business contributed 2% and stood at rupees 32 million, down 48% year-on-year basis during Q2 financial year 22. The specialized manufacturing contributed to rupees 97 million to our revenue. On the geographical revenue front, the domestic sales contributed about 47% of the revenue from operations during Q2 financial year 22 as compared to 42% during Q2 financial year 21. Domestic sales accounted for rupees 595 million in Q2 financial year 22 as compared to rupees 504 million in Q2 financial year 21, increase of almost 18%. International sales were 53% of revenue from operations as compared to 58% during Q2 financial year 21. International sales amounting to rupees 676 million in Q2 financial year 22 as compared to rupees 700 million in Q2 financial year 21, slight decline of 3%. The revenue degrew by 2% in Americas, while it is grown by 4% in Europe and strong 18% in Asia, ex-India. The rest of the world remained muted during this quarter. Now, let me hand over this call to Mr. Rauka, our CFO, who will walk you through the quarterly financial review. Over to you, Rauka, sir. Thank you.
Thank you very much, Mukund. Good evening, everyone. I hope you all are in good health. Now I will take you through the company's financials for the second quarter of FY22 and then the first half of FY22. So on year-on-year basis, Q2 of FY21 and Q2 of FY22, our revenue is increased by 67 million, which is about 6%, from 1204 million to 127 million. This includes sales by SciTech, which is roughly about 97 million in this Q2. Last year, Q2, there is no number because SciTech we have acquired somewhere in January 21. Our EBITDA is decreased by about 92 million from 585 million. Our EBITDA is at 493 million during this quarter. It's at 39% of our revenue. Profit before tax is decreased by about 107 million from 520 million to 413 million. That is at 303 million as compared to 386 million in Q2 of FY21. So there is a decrease of 22%. Q-on-Q basis, sequential basis, the revenue is down by about 100 million, which is about 1,271 million as compared to 1,370 million. EBITDA is at 493 million as compared to 627 million. Profit before tax is decreased by about 134 million from 547 million to 413 million. It's at about 32% during this second quarter as compared to 40% of first quarter. That is at about 303 million, 24% of our revenue as compared to 397 million, 29% of the revenue during previous quarter. Our year-on-year basis, first half as compared to the previous year first half, year-on-year revenue is increased by 14% by 332 million. So this 14% growth includes roughly 10% growth because of the contribution of SciTech. So we are at 2,641 million as compared to 2,309 million. EBITDA is about increased by about 18 million from 1,102 to rupees 1,120 million at 42% as compared to 48% last year. And the profit before tax is decreased by 57 million from 1,017 million to 950 million. So we are at about 36% of our revenue in terms of the profit before tax. And PAT is about 27%, which is about 700 million during the first half of FY22 as compared to 734 million during last year's first half. Our EVOX numbers are at 53 million of revenue and EBITDA of 10 million, and PAT is slightly negative because of tax impact. And tax impact because we do some withholding tax in India. This is kind of expensive for them. And the previous year, Q2 numbers were 60 million of revenue, 18 million of EBITDA, and PAT of about 5 million. Desi Biotech Q2 is the revenue stands at 150 million and EBITDA of 45 million. PAT is 25 million as compared to revenue of 130 million, EBITDA of 37 million, and the PAT of 21 million. Our largest selling product, this is, anti-inflammatory enzymes, stood at about 268 million as compared to 272 million in previous quarter. So there is a slight degrowth of 1%. And it constitutes about 21% of our revenue as compared to 18% in previous quarter, and as compared to 23% in Q2 of FY21. Our top 10 customers have contributed roughly 31% of our revenue during this quarter, as compared to 34% in the previous quarter. And Q2 of FY21, it was about 39%. B2C segment, mainly from USA, has contributed about USD 1.62 million as compared to 1.11 million during the previous quarter. India, generally we also share the breakup of, the human nutrition. This comprises of, pharma, probiotics, biocatalysis. So India business was 403 million, roughly 32% for this quarter. International business stood at about 516 million, which is about 41% of our total revenue. So total, works out 72% of our total business for this particular quarter, Q2. US sale is about 461 million, roughly 36%. So 50% comes from the US. Then other than US, other countries have contributed about 4% for human nutrition. And B2C, as already mentioned, overall, it's about 120 million during this quarter, roughly 9% of our total revenue. This is all from my side. Now, we would like to open this floor for question and answer session. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rohit Sana from Sunidhi Securities. Please go ahead.
Thank you for taking my question, sir. So, just on the overall outlook side, from the second half, how we are looking the second half of FY22 and what sort of top line growth and EBITDA number, EBITDA margin basically we would be targeting on.
Rohit, good evening. Now, there is a lot of disturbance on the supply side. There are certain disturbances on the logistics side, and there are certain price increments into most of the raw material, which is unprecedented. I feel like this should continue, and at the same time, there are certain issues like the inventory pile up at many places, and I feel like this should continue till the March, somewhere February, March. The thing should normalize. Going forward, we have also piled up some inventories at this point of time to cater to this all sort of these questions which are going to come up, and we'll move with the need-based operations, which is required to maintain the sales. At this point of time, it's very difficult, but I would like to say that we will maintain the margins, which was in the range between 40 to 48% as we move on for the whole year. And on the revenue side, it's difficult, but I feel at least I won't be able to give you the exact percentage increase, but we will be positive. At least this was the worst quarter, what we have seen. We hope that going forward, the next quarter will improve.
Okay, sir. Okay, thank you. And secondly, what sort of overall capex we would be expecting for FY22?
For FX, for this quarter, the FX, for the whole year, the capex should be the normal capex, which is going to be somewhere around 10 to 12 crore on a yearly basis.
Okay. And just any update on the on our upcoming R&D plant which we are talking about?
Yes, so it's now going through we already got the NA permission. Now the designs are getting finalized, and we are in the process of getting the sanction from municipality corporations. So probably 1.5 months to 2 months, we are away to start the construction work.
Okay. And then by what time we will be expecting to complete this?
Once we start, it will take 1.5 years, at least.
Sure.
It will go in the phases, Rohit, but the first phase should be finished within 1.5 years.
Okay. That's it from my side. I'll come back in. Thank you.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Shikha Mehta from Equity Capital. Please go ahead.
Good evening, sir. Happy Diwali. You mentioned that there has been the input costs have been high this quarter. So if you could give more color on that as to what increases we've seen in which line items broadly.
Happy Diwali, Shikha. So it's across most of the raw materials. The important thing is the coal, the fuel, which is gone from rupees 6, 5.5 to 6 to somewhere around 11.5, and currently it's about 16 rupees. So if you go through all the phosphorus salts or any other salts, everything is on the higher side. You go through the soya flour is now going down, but the main impact is because of the logistic as well. So across the sector, you will find that there is an increase in the cost.
And do we see this normalizing over the next quarter, or do you think it will take till the end of the year?
It's very difficult to predict, Shika, but my best guess is like it should be normalized by the end of this year. And that is where like we are going with the inventory pile up at this point of time, and we are going need-based operations, and we will utilize more from our inventories.
Right. Sir, any guidance on the new product, anything in the pipeline, anything interesting on that front?
So, on the biocatalyst side, we have done a good progress in this quarter. We have come out with 3 more molecules and their applications, but it has to go to the customer levels. And currently, like right now, we are standing with like 6-7 molecules on the biocatalyst front, which is a good progress. Probably it will take another 2 quarters or 3 quarters to really generate the revenues.
Sorry, you said 2-3 quarters, right, to generate revenue?
Yeah.
Yeah.
Okay. So what was the R&D cost this quarter and for the half year?
Yeah, 53 million during this quarter, and last quarter it was 43 million. So for YTD we have spent about 96 million. I'm talking about only the revenue side, and capex will be another, some 20 million or so.
Right. And so if you could give your subsidiary numbers again, I missed one when you were giving them earlier.
Which one you want, Shikha?
All the subsidiary numbers, the revenue and the EBITDA numbers for JCM as well.
Okay. So if you don't mind, I can share you with share all these numbers. You can send me on the mail. I'll share all the numbers, of the subsidiaries, whatever you.
Sure, sir. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Rohit Nagraj from MK Global. Please go ahead.
Yeah, thanks, sir. Thanks for the opportunity. So the first question is, we had introduced the probiotics for COVID fatigue in Indian market. So how has been the response till now, and what do you expect in terms of how the marketing and further penetration of this that we are planning? Thank you.
Good evening, Rohit. This COVID fatigue product we just introduced in Indian market because we wanted to test the flow of B2C in India. However, right now the sales are very low, but we got a good response in the US market where our sales are better with this product. And if you really look at it, the B2C segment of our US has gone up to 1.61 or 64 million USD for this quarter.
Right. So, any particular marketing strategy for the Indian market that we are planning for? Because I think our characteristics would be certainly different than the US market. So, any plans on that front?
So in Indian market, like we are testing the floor at this point of time. We have we have launched the product on the Amazon, and also like we are already launched our website, and we are going through some like PR activities like internet promotions right now, and we will see how the response is, because this is the first product which we are doing as a test marketing, and once we understand the market, then probably we'll come up with few more products which are in the pipeline, which are already there in the US market.
Right. Got it, sir. So the second question is on the industrial bioengineering. So particularly catering to not food area, what would be our strategy in this regard? Because given that there has been a lot of emphasis nowadays to go in for a bioproduct instead of the conventional chemical products, I think this could be a good opportunity from our perspective. So how are we, probably going ahead with this particular area in terms of our strategy? And not talking about short term, but maybe from a 3 to 5 year perspective.
Rohit, which area you're talking? Which industry you're talking?
Industrial bioengineering, which is non-food area related to, say, textiles or detergents or any other industries.
So Rohit, at present, like in textile and detergent, non-food area is not our core focus area. We are really not like focusing into those areas, but we are focusing into the food areas where like the clean label or where the E numbers are there. So how do we come out and how do we give the solutions which is E number free, chemical free? So we are coming out with the products in the food areas, but not in the non-food areas.
Right. Got it. Sir, and just one clarification. You mentioned that we are currently preparing for inventory. So these, I suppose, the product inventories we are talking about. And for raw material, we are going ahead with more or less like a just-in-time concept, right?
We are going with like both the areas. We already like worked for the concentrate, which can take care of 2 to 3 months easily. We are working with like we have like kept a lot of raw materials as well, cold storage as well, which can take care of any emergency orders. We can move quickly and can produce it. So we are not sure on the logistics because in between we face the problem like we're almost like out of the coal and we had to shift to the furnace oil for some part of the day. So we don't want to get into that kind of a mode where the cost is very high. So we are keeping all the inventories at this point of time.
Right, got it. And on cost, input cost pressure transferring to the products, so how much lag generally it takes and when do we expect that the entire input cost pressure will be transferred? Or is it just a transitory phenomena that by the time we try to take price increases, the raw material or input cost pressure again corrects and so we'll have to forego whatever margins we have in the intervening period?
Yeah, that's what has happened in this quarter, no?
Yeah.
Cost has gone up, but you're not able to really pass on because of the kind of margin we have. So generally, the margin is always taking care of such kind of a fluctuation in input cost. So it's not possible to pass on it so fast unless until the change is permanent. So this appears to be kind of a situation in this quarter we have tested. Now we have to again, as we are progressing, we will again review whether whether we need to really look at in increasing of our prices, or it's a kind of temporary transition. You can say transitory time where you don't pass on that cost to your partners basically, and you absorb it, and then going forward as things normalize, you start getting your same kind of a margins.
Right. Got it, sir. Thanks for all the answers and Diwali wishes to the entire team, sir.
Thank you, and same to you. Thank you so much, sir.
Thank you.
Thank you very much. Participants, you may press star and 1 to ask a question. The next question is from the line of Alisha Mahavla from Envision Capital. Please go ahead.
Hi, sir. Good afternoon, and thank you for taking my question. So firstly, I'd just like to understand that the tepid growth that we've seen in our revenue, is this because demand has contracted or we were unable to supply because of logistics issues or because of unavailability of input material? Maybe if you can throw some color on that. So
there is no one reason to pinpoint, frankly speaking. That's what, Mukund has explained. The entire, this is very exceptional time, frankly speaking. So very, very difficult, the input cost is going up. Logistic is another issue. And the cost of logistic is also gone up. And another thing is, because of the severity of the pandemic about 6-7 months back, maybe in the first quarter, a lot of inventory has been built up by most of the, the customers. So, I mean, the difficult time where like everyone is going very cautious approach that, wherever the cost is increased, whether, one should really work on that particular material or not, or work on something, which is really giving kind of a margin just to stabilize at least overall profitability scenario and to manage the business. So during this time, I mean, it is very difficult to give you one reason, but yes, this is, overall impact of all several reasons like higher input costs, issues of COVID still in Europe, Russia, Americas, and I think UK is struggling with another issue where truckers are not available to really transport their material because of, some kind of issue with the Brexit, and the shipments are not available, and the transit time is, in spite of the goods reach to the destination, but they are not able to clear. So it is taking 3 to 4 months to get a shipment and cleared from the port. So, I mean, the industry is really kind of a situation. Somewhat everyone is struggling in that sense. So we are not in a position to give you one single reason for that.
Okay. And sir, if you could share, have we lost any customer or any orders because of pandemic, or it's simply a question of, like you were mentioning, COVID-related issues?
Correct. So everyone is going with a very cautious approach. So procurement may not be there. They might have, a kind of a situation where they have deferred the procurement. Okay, we have so much of inventory. Like we have built up our inventory. If I look at my inventory level as of 30th September, it is about 1,153 million. So roughly 115 crore as compared to 94 crores at 31st March 21. So this is the scenario overall,
Okay, so we've not lost any customer.
Yeah,
not really to pinpoint. It's a part and parcel of the business. One customer comes and goes, but not.
One may not buy in one particular quarter or 2 quarters, but then the procurement happens after a 5 months or 6 months. So it is not a loss of customer in that sense.
Got it. And so my last question is, what are the kind of margins that we're making in our SciTech business, the new division that we're now reporting revenues for? And would it be lower than what the overall business is doing?
SciTech, as compared to our enzyme business, basically, we intend to. So SciTech business is. I'm sorry, I think there is some echo. It's a definitely different business, and this is with the intention that we have a different and novel delivery mechanism of our finished goods. So that's where SciTech has been acquired. So SciTech gross margins and PAT margins are definitely lower than us. And if I really give you the numbers in terms of overall EBITDA margin, SciTech is roughly at 25% of EBITDA margin and PAT margin of about 11%. And you are aware about our EBITDA margin of about 40 to 46% and PAT margin of 25 to 32%. So if in spite of the fact that whatever sales we have from SciTech during this first, second quarter as well as year to date 6 months, overall the profitability in absolute number they have contributed, but in terms of the percentage, definitely it has a negative impact in that sense.
Okay, so that could also be one of the reasons why our margins are below the 42% margin band that we used to talk about.
Yeah, to some extent, yes, because overall for 9 months, if you really look at the numbers for 9 months, and then you have to see the difference of the PAT we have and the PAT of SciTech, and that's how you can work it out.
Okay. And just one last question, if I may squeeze in. Any inorganic opportunities that we're evaluating currently?
Yes, definitely. That is part and parcel of, I think, our one of our strategy to grow and to sustain this particular business.
Okay, sir. Thank you.
Thank you. Participants, you may press star and one to ask a question. The next question is from the line of Manish Poddar from Nippon India. Please go ahead.
Yeah. Hi, sir. Just two questions. First one is if you could probably share what would have been the growth rate in the probiotics and the biocatalyst segment in the first half of this year?
Growth in probiotics and
Biocatalyst.
Yeah. Minute, please, Manish.
Yes, sir.
So probiotic, international and domestic. So total probiotic sales is about, one moment, I'll just give you the numbers, is about 185 during the first half of this year.
And this is what is?
It's 348.
In the base year?
348.
Oh, so sorry, you witnessed a decline up there? Is that what you're trying to say?
Yes. That's what I'm saying. Yeah, right.
So why would that be? Because I thought probiotics grew significantly in FY21, and we were that was
right. It grew significantly.
We think like it's more to do with the inventory stockpile up in this particular area.
Okay, and how about biocatalyst?
So biocatalyst is more or less same. Raukaji can give the number because one or two products which were going, those were going. But the good part is currently we are standing with now 5-6 products, and those products are going into the customers for the trials. So we feel that the revenue from the new product should come after 2-3 quarters down the line.
So biocatalyst is doubled. Last year for 6 months it was 61 million, and this half it is about 112 million.
Okay, so effectively, if I have to understand it, in the first half of this year, the lower growth which you've seen in the human nutrition is largely led by the inventory issue in probiotics.
Right.
That is how one should look at it, right? Okay, and just another data point if you could share is that, what would be your contribution, let's say, from the top customer and top 10 customers for first half 22, sorry?
Yeah.
Raukaji?
Yeah, I'll give.
It's 31%, I guess, but you can give that number.
Yeah.
31% is for the top 10 customers?
Yes.
And the top customer?
Yeah, 31% is top 10 customers, and top customer is about 67. It's roughly 6%.
So here also, so the top customer, you still witnessed a decay in the first half. And could you probably explain the reason for that?
It's the same Manish, what I talked about inventory issues.
Okay, and so do you see, let's say, the situation, probably stabilizing now incrementally, or?
No, I don't feel like the situation should stabilize till March end. It should stabilize from the first quarter of next year.
Okay, and just one last one from my side. On the animal side, I think we were looking for, partnerships up there. So probably could you help us with an update up there?
So not on the animal side. We were looking into the partnership on the food side in the Indian market as well as in the South Asian market. We have appointed Azelis as a distributor for 5 countries in South Asian countries for the food, and nutraceutical business. In Indian food market, we are joined hand with the Anshul for a distribution. In the animal feed, we were going on our own at this point of time. We started our Singapore office, not exactly the office, it's work from home office, but we started the recruitment in Singapore. And we started some recruitment in India as well to develop the market in Eastern Europe. And we are working on the Latin American development at this point of time.
So if I just to understand this better, so you will do the registration by yourself and also scale the business organically and not through partners. Is that what you're trying to infer to?
We are working on both the strategies. We are looking for organic growth as well as the inorganic growth. So if the opportunity comes on the inorganic front, we will definitely look into it.
Okay, fine. Thank you so much, and happy Diwali.
Happy Diwali to you, man. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Participants, you may press star and 1 to ask a question. The next question is from the line of Bhavesh Jain from ITI.org. Please go ahead.
Thank you, sir, for giving this opportunity. Sir, how important will be US market for us? Because last 3-4 years, the growth rate is not there in that particular market. Even H1, we have seen 4% growth. And we have guided in 5 years to double the revenue. And how important that market will be for us to achieve that target or aspiration of doubling the revenue in 5 years?
Now there's a lot of disturbance from your phone.
Yeah, but
Hello?
US.
Hello?
Yeah, this is fine. I mean, we have understood your question. Just Mukund is answering your question. Please.
Yes.
Yeah, the US is going to be important market. No question about it. It's our important market, and our presence is very strong in US market. We expect 8 to 10% growth, which is coming from US over a 5-year period.
Okay, and which segment largely will drive this growth? Because I'm seeing last 3-4 years and even this H1, it is not getting translated into higher growth.
So the growth which will come, most of the growth will come from the B2C segment, which we are really focusing and targeting. If we really see into the B2C areas, last year also we've grown from 3 to 5 million. Currently also, if you look into this quarter, it's already 1.61 million. This year probably we should touch about 6.5 million into this area. So this is going to be our growth target as we move on into the US, besides the normal growth in the B2B nutraceutical business.
Okay, and India growth rate has been good in this H1 also. So X of this Titech also, the growth rate has been good, and we are seeing that traction?
No.
If we just check out the Titech, then probably this is a more turbulent quarter. Yeah. So the growth is almost at the same level at this point of time because of some of the inventories issues from some of the larger customers as well at this point of time. So the thing should normalize by the first quarter of the next year.
Okay, sir. Thanks a lot, and all the best.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Rohit Nagaraj from Emkay Global. Please go ahead.
Yeah, thanks for the follow-up. So during this quarter, we must have faced, issues on exports because orders must have been on a CIF basis. Would that be the right way of looking at it? And are we now looking to correct it by giving it on FOB basis, or how are we trying to tackle this issue? Thank you.
With our major export from India is number one to our own US subsidiary company. Okay. So whether you make it CIF, FOB, finally it will have impact on the consolidated numbers, right? Other than US other customers, wherever possible, we are negotiating as far as the cost of the shipments are concerned. But still, the cost is gone up substantially, so it is very difficult. We also need to share. So it is an approach where we want to have some kind of a continued relationship with our customers, not exactly looking at that the entire cost we can pass on to our customers.
Right, got it. And so last quarter we had provided guidance, and I think you mentioned in the earlier remarks as well, on gross margin side 70 to 75%, EBITDA margin front about 40 to 48%. So is this applicable for FY22 as well, or we are looking that FY22 could be a transitory year because of the issues that we've been discussing till now?
Yes, I think this is transitory. And that's the reason, now we are also going with a cautious approach, wait and watch. And I think that's how the scenario is.
Sure, sir. Thank you so much and best of luck, sir. Thank you.
Thanks.
Thank you. The next question is from the line of Bhavesh Jain from ITI.org. Please go ahead.
Sir, one follow-up on our top product, we were seeing incremental competition and some pricing pressure. So how has been the competition in that product?
So yes, the pricing pressure is there, but we couldn't pass on the cost rise at this point of time into the top selling product. But if we really look into the volume wise, we have sold more than what we did last year.
Okay. And traction has been good, right, as of now, in terms of volume?
Yeah. So volume wise, it's better. Margin wise, it is on a little lower side at this point of time because we couldn't really pass on the prices.
But has the prices stabilized, or we still see more pressure on the prices?
It's more or less stabilized, but probably there can be some pressure. But in this kind of a scenario, I don't feel like the prices should go down further. But it's more or less, I guess, it's stabilized at this point of time.
Okay, sir. Thank you. Thanks a lot.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. As there are no further questions, I will now hand the conference over to Mr. Mukund Kabra for closing comments.
Thank you, everyone, for all of your participation and listening us. I wish you all of you a very happy and prosperous, happy Diwali and a prosperous New Year. Thank you once again. Thank you.
Thank you very much. On behalf